Forex trading tax considerations. Beginner's Guide to Reporting. Forex trading can be a rewarding endeavor, but it's important to understand the tax implications associated with your trading activities. Tax obligations vary by jurisdiction, so it's crucial to consult with a tax professional or accountant familiar with Forex trading regulations in your country. However, here are some general considerations and guidelines for reporting Forex trading taxes. Understand tax laws. Begin by familiarizing yourself with the tax laws and regulations related to Forex trading in your country. Tax rules can vary significantly, and it's essential to understand how Forex trading profits and losses are classified, what expenses can be deducted, and any specific reporting requirements. Differentiate between capital gains and income. In most jurisdictions, Forex trading profits are generally categorized as either capital gains or income, depending on your trading activities. Capital gains typically apply to traders who engage in occasional trades, holding positions for more extended periods. Income treatment is usually applied to traders who conduct frequent and substantial trading, treating their profits as ordinary income. Keep detailed records. Maintaining accurate and detailed records of your Forex trading activities is crucial for tax reporting. Keep track of all your trades, including dates, currency pairs, trade size, entry and exit prices, and any associated fees or commissions. These records will help you calculate your gains or losses accurately and provide necessary documentation for tax purposes. Calculate gains and losses. To determine your taxable income or capital gains from Forex trading, you need to calculate your gains and losses accurately. This involves subtracting your total losses from your total gains. If your losses exceed your gains, you may be able to offset other income or carry forward the losses to future tax years, depending on your country's tax laws. Consider conversion rates. If you trade in multiple currencies, you'll need to consider the conversion rates at the time of each transaction. For tax purposes, it's important to use the correct conversion rates to calculate gains or losses accurately. You can obtain historical exchange rates from reliable sources or use the rates provided by your trading platform. Deductible expenses. Certain expenses related to your Forex trading activities may be deductible, reducing your taxable income. Examples of deductible expenses may include trading-related software or tools, data subscriptions, internet costs, trading courses or education, and fees paid to brokers or signal providers. Keep track of these expenses and consult with a tax professional to determine what is deductible in your jurisdiction. Reporting requirements. Be aware of the specific tax reporting requirements for Forex trading in your country. In some jurisdictions, you may need to file a separate schedule or form to report your trading activities. Ensure that you meet all filing deadlines and provide accurate and complete information on your tax return. Seek professional advice. Given the complexity of tax regulations, it's highly recommended to seek professional advice from a tax professional or accountant with expertise in Forex trading taxation. They can provide guidance specific to your situation, help you understand the applicable tax laws, and ensure compliance with reporting requirements. Stay updated. Tax laws and regulations can change over time, so it's important to stay informed about any updates or amendments that may impact Forex trading taxation. Regularly review tax guidelines and consult with a tax professional to ensure you're aware of any changes that may affect your tax reporting obligations. Remember, the information provided here is a general guide, and it's crucial to consult with a tax professional or accountant who can provide personalized advice based on your specific circumstances and the tax laws in your jurisdiction. In conclusion, understanding the tax considerations and reporting requirements related to Forex trading is essential for beginners. By staying informed, keeping accurate records, and seeking professional advice, you can ensure compliance with tax regulations and effectively report your Forex trading activities.